Welcome to the Latin Wealth Podcast, a podcast dedicated to educating the Latino community about entrepreneurship, investing, and business.
Yo, what's going on, Latin Wealth family? Welcome to another episode to Wealth Wednesday. And if this is your first time tuning into Wealth Wednesday, this show is all about diving into trending news, topics, finances, business, and how it relates to the Latino community. All right. Typically, I have a co-host on here. Shout out to Jeremiah. He's out handling some business right now. So it's all good. It's going to be you and I on this show today. We're going to have a phenomenal show. We're going to be diving into the 10 most expensive cities to raise your child in. And just a little teaser, 5 of those cities are from California, the state that I'm from. We're also going to be diving into why Mexicans are joining the investor class in the masses. We're seeing a huge number of people in Mexico transitioning from not investing their money at all to a huge number of Mexicans changing their mindset, changing their perspective on investing. What's a beautiful thing. We're going to be diving into why that is and where they're investing their money at. As I said, I usually have a co-host on here, so Jeremiah will be back next week. But just to give you guys some quick updates on the platform. Look, y'all, we got some dope content that's been coming out and that will continue to come out. Great interviews coming out. Just released a show around mental health and personal development with my guy Carlos. Episode number 1 came out last week. Number 2 will come out next week. And yeah, I mean, it's just very important to dive into mental health, personal development as we continue to find and understand what wealth means for each one of us, right? We want to take a holistic view on this platform and continue to give you all the resources and tools to be successful, right? So great show. Like I said, interviews coming out. Wealth Wednesday coming out every single Wednesday. So if you have learned or gained anything from this platform, it would mean the world to us if you can share this episode or this platform with one other person in your circle. Also, be on the lookout as Latin Wealth is going to be hosting an event in Dallas, Texas. Everybody is welcome. In respect to Hispanic Heritage Month, we wanted to put on an event. More information on that coming soon, but we are going to be hosting an in-person event in Dallas. It's going to be very exciting. With that out the way, let's dive into today's topics. So, look, we're going to be diving into investors at Mexico, where they're putting their money at, what's the shift, what happened, why is there been such an increase in investors in Mexico. So did you know over 13% are now active investors? 13% of Mexicans are active investors, right? And many of their peers in emerging markets, Mexicans are becoming increasingly active investors. The citizens of Latin America's second largest economy, right behind Brazil, has seen a skyrocketing rate of investment actively in recent years, right? So if you're thinking, Chris, you just said 13%, only 13%, that's not a huge number, right? Well, it is a big number if we look back at where they started in 2015. In 2015, less than 1% of Mexicans held an investor account. Fast forward less than a decade, and you see over 13%. And so what I want to quickly do is I want to share my screen as we look into these numbers and put things in perspective. So I mentioned in 2015, as you can see down below, they were down 2% from the year before. And you can see less than 1% of Mexicans had an actual investor account. And you can see over the years, you know, it kind of stayed steady. 2016, 2017, 2018, little growth, 2019, a bigger amount of growth. And then you see in 2020, 2021, 2022, just a massive increase in a short amount of time of Mexicans opening up an investor account, which is a beautiful thing to see. I'm going to stop sharing my screen. You know, a lot of that it's interesting that we see such a peak, not even a peak, but a huge amount of growth in 2020, right? 2020, a lot of us were at home. A lot of us were, not working or, waiting for work or with their family and whatnot. They had time to understand and take the time to educate themselves about finances, about investing, about, hey, this pandemic that's happening, this is something that's out of the norm. What can we do to prepare ourselves, protect ourselves from something like this happening again, right? As we know in the Latino community, what's really common is just not having a good relationship with money, not having a good relationship with banks, right? When we don't have a good relationship with money, we don't have a good relationship with banks, where do we end up putting our money at? We know we put our money underneath the mattress or in your shoe box, and it's just sitting there and nothing's happening, right? While inflation is going up and rising, you're technically losing value on your currency, right? So you've seen a huge increase in the year of 2020 of Mexicans opening up an investor's account, which I keep saying it's a beautiful thing to see. Now you may be wondering, so where are Mexicans putting their hard-earned cash into? Where are they putting their money into, right? And so I'm going to share my screen once again. I'm going to show you a different graph. And it's pretty dope to see because I was just having a conversation with somebody earlier today, and we know Mexicans, Latinos, we work extremely hard. We're extremely hardworking people. We know how to work really well with our hands. We know how to utilize our physical to make money, right? But there's a gap when it becomes between using the physical and using the mental to create wealth and to create income, right? One of the reasons why we're putting on that event out here in Dallas, but it was interesting to hear the young lady's perspective where it's funny, her grandfather, if I'm not mistaken, had one of the first movie theaters in the part of Mexico where she's from. But the relationship her grandmother had with money was so toxic and so bad that after the grandfather passed away, she ended up giving away or getting rid of all their inheritance, their money they saved and whatnot. She felt like it was evil to have this amount of money, which is crazy, right? So I say all that to say, as we share our experiences and our perspective, in 2020 was a great time for all of us to take a step back and understand how money works, understand how the economy works, and understands that there's things that happen in the world that will directly affect you and your family, and you want to prepare for that as much as possible. So enough of me blabbering. Let me go into this graph by Latino Metrics. Shout out to Latino Metrics, always creating dope visuals, dope graph, and great information. So look, you can see the purple box is national debt. This is $2.3 trillion, 61% of how Mexicans are investing their money are Treasury bonds issued by the Mexican federal government. These government bonds represent a comfortable majority of the total investment, as we can see, and the total investment is 2.3 trillion, and which is absolutely crazy. It's well above the total Mexican gross domestic product for last year. So why Treasury bonds? Mexican Treasury bonds are considered the safest investment in the country. The Mexican government has never defaulted on them in the country's modern history, meaning that they have been seen more as a stable means of keeping ahead of inflation and making some gains over time. This is exactly what we were speaking about as we're talking about, like, why in 2020 did we see a huge jump? Because people want to put their money into something that's more stable and something that will keep them ahead of inflation, as this is something that we've been that we've been dealing with over the past couple years, right? Let's move on to this blue box, stocks. Stocks make up roughly about a quarter of all investment in the country, and recent growth in the sector has been driven in part of the rise of independent Robinhood type brokerage services. All right, so just like out here in America, how we have Webull, we have Robinhood, these different platforms that make it super simple for you to go on there, open up an investment account. I mean, it's simple to open it up anyways, but platforms like Robinhood make it even more simple and a little bit more entertaining for you to open up an account. And what I mean by entertaining, when you make a stock investment or when you sell something, you get the little confetti, a little bit of dopamine hit as you're investing. And what's cool about it is they're very simple and easy to use, right? So that opens up the market up for a lot more retail investors to come in, utilize the app, and invest, right? That's why we see, again, 2020, people were sitting around, people were trying to figure out ways to make money. Stock traders became a big thing since the pandemic, right? So with that being said, Mexico has their own, a couple different services and brokerages that they offer over there. And these brokerages, they offer, consulting, investment funds, financial products, and, all the services to help Latinos achieve their goals, right? They even have some promotions to entice people to come in, whether it's, there's like a wide street of promotion that I'm drawing a blank on, but I know like travel benefits, you can get like extra stocks, like if you put $100 in, you'll get $50 worth of additional stocks, right? A bunch of different promotionals to get people in there. I think this is great. It's giving people, at the end of the day, it's giving people more resources and tools to learn about investing. You go to these different sites such as GBM is one of the brokerages. They got their own podcast. They got blogs. They got information on there that people can consume and they can understand finances. So stocks, 24%, $920 billion makes up where Mexicans are investing their money. I want to go down to bank deposits, as this is also something that's very interesting, that's on the rise, something very different from America. Most of the fintech banks in Mexico offer high yield saving rates for accounts ranging from anywhere from 10 to 15%, which is absolutely absurd. If you know, in America, the typical the saving rate for a bank out here, Chase U.S. Bank, I think it's 0.01%, which is insane. I know there's some banks out there, some online banks, they may offer up to 3%. I think Apple, if I'm not mistaken, Apple has one that offers around 3%. Synchrony Bank has about 2% in those range, but nonetheless, there's not too many products and services out here in America that offer anywhere near 10 to 15% just to leave your money in the bank. So Nubank is one of the banks out there, and Mercado Pago is another one out there. Two different fintech banks out there that are offering high yield saving rates for people to put their money into. So look, I'm going to stop sharing my screen. Very interesting look that we've seen the jump from 1% less than 10 years ago to 13% in 2024. It's going to be very interesting to see where that number continues to grow in 2025, 2026. You've seen the graph at the beginning of this segment. I mean, every year it's just getting higher and higher. So it's looking promising for Latin America, right? We see what El Salvador is doing, President Bukele, how they're trying to integrate, Bitcoin finances into the city. They're trying to make it a part of the city. Dominican Republic, what they're doing as they're developing as a country, not only developing as a country, but going into other countries and seeing opportunities, right? So Mexico, they are increasing the amount of investors in the countries, which is beautiful to see. So we're seeing a ripple effect from everybody, and we, hope to see it throughout all the countries, including Puerto Rico, but beautiful to see. Let's transition a little bit though. I want to transition into the 10 most expensive cities to raise kids in the United States. Now, I don't have any kids myself, but I hear all the time how expensive to raise kids, right? So I want to read this real quick. The average yearly cost of raising a child across 100 most populous U.S. metro cities is about $22,000, about $23,000 a year. That's the average across 100 different cities in America, the most populated cities in America. Now, it widely varies between the cities. You know, some cities are a lot lower than that. Some cities are a lot more than that, right? Now, I'm going to go into the top 10, and the estimates are based on the average cost that two working parents would be expected to pay in a given year based on the Department of Labor data. We've gotten information from them before, so take it for a grain of salt, but very interesting nonetheless. For one child, these expenses include childcare, food, housing, healthcare, transportation, and other basic necessities. All right, so at the top of the list, number 10 is Honolulu. As we know, Honolulu, Hawaii is a pretty expensive state to be in. The average annual cost of raising a child in Honolulu is about $31,000 a year. The total cost of raising a child up to the age of 18, so when they're 18 years old, supposedly they're supposed to get the boot out the house, it's going to be about $557,000 for the whole 18 years that you'll be raising that child. So very interesting. I mentioned that 5 of the cities were in California. So we got number 10, Honolulu, number 9, Denver, number 8, Los Angeles. The average annual cost of raising a child in Los Angeles is about $31,000. The total cost of raising a child unto the age of 18 is about $566,000 for the total 18 years. Number 7, we got Thousand Oaks, Ventura area, New York City. We got San Diego. We got Bridgeport, Connecticut at number 4. Number 3, Boston. Boston, the average annual cost of raising a child out there is about $35,000 a year compared to Honolulu, which was at $30,000. The total cost of raising a child up into the age of 18 in Boston, you're looking at about $634,000 a year. Number 2, San Jose. And can anybody guess what number 1 is? All right. Number 1, the average annual cost of raising a child in this city is $37,000 a year just to raise the child. That does not include whatever, car insurance, life insurance, any other personal things that you got going on, right? You taking your wife out to dinner, you guys going on vacation, doesn't include any of that, right? The total cost of raising a child up until the age of 18 in this city is $672,000. We're looking at San Francisco coming in as number 1. These are the 10 most expensive cities to raise kids in the United States. What's also very interesting to see is, as you guys know, looking at this, you can take away these numbers, take away anything that's related to, raising a child. These cities are some of the most expensive cities in America and have some of the highest housing costs in the country, right? So, which is being the biggest expense in a family, typically to household budget. So I know that was a lot of information, but very interesting to look at, these statistics, these numbers. If you're a family, if you're looking for somewhere to lower your expenses, or you're trying to figure out maybe a more affordable place to live, to take your family to transition into, it's always good to look at articles like these to understand, where the numbers are at. Top 10 most expensive city. I think one of them that looked maybe that I was surprised by. Actually, I'm looking at these cities. None of them are surprising. We knew Hawaii is expensive. Denver is definitely a place that's it's on the up and coming. Most of the cities in California, New York is expensive. So Very interesting data and information here. And look, if you guys learned anything from this podcast episode, if you enjoyed it, if you're tired of just seeing me by myself and you want Jeremiah to come back, leave us a like, comment, subscribe, share this episode with one other person that needs to hear the Latin Wealth platform. Hey, and as always, we'll catch you guys next week. Peace.